Hi, I'm Joe Wright with Sage Advisors. Today I'm going to be talking to you about what's appropriate for life insurance. Most people are uncomfortable with dying, and it is kind of a hard fact to think about. But most people also need to plan to replace every cent that they're worth to the folks that are going to be left behind. And when I break this down, I think of needs and wants for my beneficiaries when they receive my life insurance death benefit if I did pass away. Our life insurance needs to be broken down into what we need and what we want. For most people, covering the needs only is going to be the step that you're going to take. And the needs that most people have are final expenses, paying off debts or obligations that we leave behind, and providing an income for the folks that depend on us on a daily basis. Final expenses typically start at around $15,000. It's hard to say how much it's going to require at that point in time. Major debts and obligations. Generally speaking, plan to pay off all your debt and a mortgage, a car loan, student loans, anything that is taking away your income each month. And then finally, and the hardest thing to really tackle, is how much income needs to be left over for the family. Best way to do this is to figure out kind of what that number is on an annual basis after the debts are paid off, after the final expenses are taken care of, and that's an annual income needed for the family for a certain amount of time. It's best to start simple, and what you do is you take that annual amount and you divide it by the rate of return you expect to invest that money for, and that gives you a sum of money. First of all, to give you a good idea, let's say that someone needs $60,000 a year and they plan on investing that at 6% annualized per year. That is a sum today of $1 million. So that's how you generate how much is needed for an income stream upon your death. Third is taking care of educational expenses for kids. If you were planning on helping your kids get through college while you were still alive, the best thing to do is to help take care of it when you actually pass away. And the best thing to do is figure out how much the cost of a 4-year education costs today for whatever school you plan for your kids to go to. And that's the sum you need in that regard for life insurance. Some folks decide to cover certain wants with life insurance. Now, I would say that folks that have an income greater than $250,000 or a net worth greater than $1 million are good candidates to decide to cover wants with life insurance. Otherwise, stick to the needs. One of the first wants that people take care of is pre-insurance or estate creation. So they think that they would like to create an estate greater than the amount that they already have to pass on to the next generation. Second would be estate taxes. Folks that have a substantial amount of wealth they need to pass on to the next generation will also get taxed on the amount they transfer. So covering estate taxes with life insurance is a common strategy. Third is charitable gifting. A death benefit can provide for your favorite charity upon your death. And finally, cash value. Permanent life insurance provides cash value as somewhat of an investment vehicle or a reserve amount that's within a life insurance policy. This can also be a valuable addition to one's portfolio. Folks that are focused on covering needs with life insurance, I typically will recommend term insurance. For other people with a significant amount of wealth and they're well on their way to reaching all their other financial goals, permanent insurance is a viable option. Achieving success in investing is tough for people to do on their own. Here at Sage Advisors, we've got the tools and the expertise to make that happen for you.